What's up everyone, I hope you're doing fine as always. Today I'm bringing you a video with Kevin, who is a new team member at Desire Trade, one of the new coaches, and I asked him to do a video about the difference between scalping and day trading. He's been doing both for multiple years now. It's both scalping on a very short time frame and day trading the news as well sometimes. So I thought it'd be cool to see what his preferences are, what he sees as the benefits of scalping versus day trading, which one is better for different people, and you get to hear his thoughts. So I don't want to waste your time. You have some cards below if you want to jump to sections of the videos, and we'll dive right into it.
Hi there. Today I'll be looking at two very different styles of trading that I work with, scalping and day trading. Two questions that you need to ask. Are you better suited to fast in and out scalps or slower intraday moves? Or do you actually need both in your toolbox? I actively work with both, depending on what's going on in my life at any given time. By the end of this video, you'll know which style fits your personality and how you can combine both. We'll start with scalping. The term scalping equates to very short-term trades, usually seconds to a few minutes, sometimes up to an hour, but that's rare. Aiming for multiple small moves rather than the big swings. Scalpers often take many trades per session, especially in very active conditions, focusing heavily on spreads, execution speed, and getting in and out fast, while at the same time focusing on following their strategy. Typical tools for scalping might be lower time frames, 1 or 5 minutes, fast EMAs, liquidity zones, and strong focus on tight risk. Now day trading. With day trading, you'll be holding trades for minutes to several hours within the same trading day, ensuring that you're flat the market before the daily close or before your end of day. Day traders may only take 1 to a handful of trades per day, but target bigger intraday swings rather than a few pips at a time. Typical tools will be 15 minutes, 1 hour or 4-hour charts, red news events, intraday levels, and a bit more time to plan versus scalping's split-second decisions. The key differences between the two methods. So looking at the aspect first, holding time. With scalping, seconds to minutes. Occasionally, it might go up to an hour, but that's very, very rare. Day trading, be minutes to several hours, all within the same day. Trade frequency. Many trades per day with scalping, very high frequency. Day trading, few, more selective trades per day. Pace and intensity, extremely fast with scalping, constant screen focus. With the day trading, it's fast but more measured, more planning time. Profit per trade. Scalping, small targets, relies on accumulation. Day trading, larger intraday moves per trade, giving you the bigger profits. Costs and spreads. Scalping, more sensitive to spreads and fees due to the frequency. Day trading, still important, but less impact per trade. Time frames used, scalping, 1 minute or 5 minutes, plus higher time frame for context. Day trading, 15 minutes to 1 hour, plus higher time frames, again for context. Screen time, scalping, very high, constant monitoring. You can't take your eyes off of it. Screen time for day trading is high, but with more breathing room. Skill requirements, highest precision and execution discipline with scalping. Really, you've got to be full on it all the time, constantly. With day trading, it's strong, but with a slightly more forgiving pace. Now, what type of personality is scalping best for? Consider these points. Do you enjoy high pressure, rapid decision making, and don't hesitate under time pressure? Can you handle intense focus for 1 to 3 hours straight, watching every tick without getting reckless? Do you have very clear rules? And are you comfortable cutting losers quickly and often? You'll be doing that with scalping. Are you able to trade during the most liquid sessions, e.g. London, New York overlaps, and on low spread pairs so that costs don't eat all of your edge? Those who should avoid pure scalping might be traders who tilt easily after a string of losses, those who can't be at the screen continuously during peak hours, and those with very high spreads, poor execution, or limited bandwidth. Who day trading is best for? What type of personality? Consider day trading if you want intraday trades, but at a slightly slower pace than scalping, with time to plan entries and manage positions. If you're comfortable holding a trade for a few hours and sitting through normal intraday noise, it might be for you. You can commit blocks of time to watch the markets, but don't want to be glued to every tick. Do you like building a narrative around the day? Key levels, sessions high and lows, news and trend direction. A plus for both methods is both scalping and day trading avoid overnight exposure, which removes gap risk and surprise overnight moves. Why do I personally combine both? It's simple. I absolutely love the freedom and diversity in life that being a successful trader offers. I wasn't handed that success on a silver platter. I've paid for the education and worked extremely hard to get it. By having more than one style of trading at my disposal ensures that I maintain that freedom. I don't have to forfeit a trip to the beach or have to pass up on going out for lunch or dinner with friends and family. By having the option to work with different methods, I can fit my trading in with what is for me the more important aspects of life. My routine is very straightforward. Sometime over the weekend, I'll go through the following week's Red News calendar. Every Red News event is listed on my whiteboard behind me. Knowing when these events are taking place is essential to both scalping and day trading. I don't want any nasty surprises when I'm trading. On days when I'm going to be settled somewhere at London or New York Open, and I'm seeing clean directional flow and strong session ranges, I lean more into day trading moves following the main trend. On choppy range-bound days, or around specific liquidity zones, or if I'm limited with time available to trade, I'll lean towards scalping, taking positions that meet my strategy, aiming for smaller moves to take profit. Many experienced traders use scalping as an add-on to a broader style of trading, giving them an alternative method. The two different playbooks that I apply. Scalping mode first. Timeframes are 1 or 5 minute entries. 15 minute as well for context. I like to see the bigger picture. Targets, small, fixed, pip goals, or structure-based scalps. If a position moves fast and I can catch it, I'll lock with a price stop and let it run for a while, see how it goes. Risk is smaller in pips, but more trades and keeps to a strict daily loss limit. Rules, no holding through major news events, absolutely not. Day trading mode, timeframes, 15-minute charts for entries, 1 hour charts as context, again, zooming out to look at the bigger picture. Targets, set price levels and follow up with a price stop. Risk, fewer trades, slightly larger stops and targets. Rules, cap the number of trades per day. Don't downshift into revenge scalps if the day trading idea is failing. Stick to the take profit plan so short-term trades do not sabotage longer-term intraday plans. When will I choose one over the other? I'll choose scalping when London Open is very volatile, but structure is messy. There's no clean trend but clear liquidity pools. I'll choose scalping when I only have 1 or 2 hours to trade and want to be flat quickly before another commitment I might have. Also, when spread's tight and there's no major red news events minutes away, that's when I'll choose scalping. I'll choose day trading when there's a strong fundamental driver, like red news coming up, trends are playing out, and there's a clean directional bias. Also, when markets open with a clear break from prior ranges and I see probability, it's only probability we're working with, to be able to ride out the move for part of the daily range. And when I've got time for a full session and I want fewer but higher quality trades. Now looking at the risks, the psychology and expectations. Both styles are high stress and unsuitable for some people. They require strong risk management and emotional control. Trade frequency does not equal more money. Scalping without an edge just multiplies fees and mistakes. Day trading with no plan just turns into random entries. Edge comes from having a clear model and consistent execution. The right style for you is the one that you can execute consistently with discipline, not the one that looks sexiest on social media. Choosing either scalping or day trading, or both, will ensure one thing. You'll be able to sleep at night not worrying about open positions. That in itself is priceless. Thanks for tuning in, and I'll see you again soon.